In video lecture 3.2, we're going to be talking about the choices we have for formatting the balance sheet. Most companies present their balance sheets in what is known as the classified format. The classified format presents our assets and liabilities grouped as current assets and non-current assets, current liabilities, non-current liabilities. Companies also present 2 years' worth of financial information. Lowe's company, the home improvement store, goes a step further, and they provide a little vertical analysis for us that tells us the percentage of each that is from total assets. So this is a bit unusual, but a very handy tool for the users, and a good job by the people at Lowe's, because they understand what the users are looking for. As you can see on the classified balance sheet, we group current assets and we provide the total current assets along with another element that is a subtotal, and that is our total assets. We also group our current liabilities and provide a subtotal for them. And Lowe's, unlike many companies, provides an element for the total liabilities. Most companies do not do this, but again, as we saw, users will perform the debt to equity ratio. This allows a very easy comparison. The other format for the balance sheet is an unclassified balance sheet, and this is very rare for publicly traded companies. This is the balance sheet for St. Joe Company, and you'll notice that they do not group assets and liabilities based on current or non-current. They do not provide a subtotal of current liabilities. This makes it very difficult for the users to perform the current and quick ratios, measures of liquidity. If you were to read through St. Joe Company's annual report and 10-K filing with the Securities and Exchange Commission, they discuss this, and they state that presenting their financial information on the balance sheet in a classified manner would make them appear to be less liquid than they actually are, because they believed, at least back here in 2007 when they released this, that their real estate, their land, gave them the ability to go to a financial institution and draw down cash as they needed it. As you can see here, they had cash accounts receivable that were much less than their accounts payable. So anyone doing a current ratio would come up with a very low number for St. Joe. Their contention was that this provided false information to the users. So they took a non-standard approach, but they disclosed why. That is our requirement to our users. But in general, an unclassified balance sheet does not serve the needs of our users and should be avoided. There's also different formats as to the presentation of a single year's worth of information on the balance sheet. Almost all companies do what both St. Joe and Lowe's do, and that is to use one column to present each year's financial information. There will be multiple columns, but this will be comparative or analytical information. In textbooks, particularly principal textbooks, you will often see a two-column approach to the balance sheet. In the two-column approach, items that have valuation associated with them, that is, contra accounts, are presented in the left column. So here we have accounts receivable less the contra account, allowance for uncollectible accounts, and furniture and fixtures with their contra or valuation account, accumulated depreciation, presented in the left column, and then the total amounts presented in the right column. This is very rare. The preferred format for most companies is a single column format. And there are other choices in formatting we can make. Almost all public companies present only the net amount versus placing the historical amount and then the contra or valuation account with it, which reduces it to its carry value, which is what we saw here in the two-column format. The accounts receivable presented as simply the total of all the accounts outstanding, a valuation account presented, and then the net realizable value of the receivables, the total amount of receivables minus the allowance. And you have the furniture and fixtures, which are presented at historical cost. We then present a separate line for accumulated depreciation, and then the net amount for furniture and fixtures. Well, most public companies simply present one line item. So here in Lowe's, property less accumulated depreciation is presented as one line item as opposed to two in that single column format. And you can see several of the elements are presented net of some valuation account. Now the values in these valuation accounts, these measurements, are fully disclosed and contained in the footnotes to the financial statements. So to sum up, the preferred method of formatting the balance sheet is to use a classified balance sheet that presents one column worth of information and presents amounts for each element net of their valuation accounts. Since that is the way most companies present their information, that is the format that you should prefer in preparing balance sheets for both this class and when you get out there in the real world.